Hi, welcome to the Bitcoin Morning Brief. We're all in kind of interesting places here. I am on a yacht, and we're docking, so that's interesting, but I'm going to have fun with you guys. So we have Giacomo and Jimmy on today, and obviously Tone. Oh, and a baby. Oh.
Hey guys, Daddy's on a show.
This is going to be a fun one today. And well, Giacomo, we're happy to have you back. How's everything going?
Fine, thank you. I'm sorry for the last episodes, but I was always jammed in traffic. Now I'm not on a boat, but I'm fine.
No way. Italians can be slow during the after. They take afternoons off sometimes. What are you talking about? Italians have more than American and German work ethic, right? I'm just being obnoxious. Tone, how's everything going? I think you're flying today.
Good. Yeah, we wanted to, as much as I wanted to wait for you to like dock so that all the people get off the boat. I do have to catch a flight sometime soon. I got a bunch of work I still need to finish before I go for that flight to Ireland. So we had to get the show going at our usual noon.
All right, well, let's get it going. All right, here we go. Actually, we're gonna do this one last. So Nathaniel Popper published a new piece. One firm is way ahead of Wall Street on Bitcoin. This is about Susquehanna, which is actually a very fantastic firm, I think. And so for the most part, it's saying that they have been, sorry. So they've been actually trading Bitcoin for quite a while now, and they're very interested in futures. And so it's kind of a little vague, but that it's finally coming out for the most part that, you know, institutional investors have not just getting in right now, but they have been in. And for the most part, that's actually not so much of a surprise to me. We're talking about Goldman Sachs and everybody getting in now, but this is saying that they've actually been in. Tone. What was your take on this?
Well, again, it goes to my saying that people in the crypto space keep saying how, well, the price of Bitcoin has to go up because Wall Street is getting in. In reality, none of these people have any idea what they're talking about because they actually don't know. So we're just finding out, publicly. I mean, a few people I'm sure knew privately that this big firm has already been in, and they've been in for 3 years. But guess what? They're not in. They're not like buying Bitcoin and holding on to it. They're a firm. They're a trading operation. They're trading this stuff, right? You have no idea if there are even bigger firms than them that have been in even longer and they're actually trading this stuff. So when people tell you that Wall Street is getting in, these people don't know what they're talking about, for one. And two, it doesn't mean that the price of Bitcoin has to go up if Wall Street is getting in. Wall Street could be getting in and trading the hell out of this thing, which means they are opportunistic. So it's possible that they are looking forward to driving the price down so they can buy it up on the cheap. So in reality, people know absolutely nothing. Of course, it could also mean that they are buying up Bitcoin, taking them out of circulation and holding them. The piece talked about how they became interested when the Winklevoss twins, asked them to help with the ETF. And while they're a traditional firm, so obviously they are very interested in the futures market, trading the CBOE futures, the CME futures, and they're probably trading on the Gemini exchange, which seems to be one of the more professional exchanges for traditional finance. And that's what the Winklevoss twins are focusing on. I'm pretty sure they're not using Bittrex or what's that one, the popular Binance. I'm pretty sure they're not using that insanity. And the other thing you don't know is how focused are they on Bitcoin versus the dollar versus a couple of shit coins, right? Like Ethereum and Litecoin. So you don't know what their focus actually is. They're also saying they're going to open it up to clients. I'm not exactly sure what that means. There aren't any specifics on that, but it's possible that they would create, a market where they would have a nice back-end engine where they would serve as like a broker to their clients, and their clients can purchase Bitcoin. They're not going to be able to micro trade. They're not going to be able to, I'm pretty sure their 500 clients will not be able to, day trade this stuff or, intraday trade this stuff. But if this firm does have a big connect to people like the Winklevoss twins and some of the other OTC dealers, or they have a, direct connect to exchanges, they can certainly give their 500 clients exposure to Bitcoin on swing trading basis or longer term holding basis. So that could be a good thing. I guess you can say that, hey, if this firm opens it up to clients, those people are going to buy Bitcoin. But if they open it up to their clients trading futures, those people might want to, sell Bitcoin as well. So you don't really know. Remember, just because people are getting in now and buying up some Bitcoin at 7,700 does not mean these people are not going to panic if the price happens to dip back to 6,500. Remember, the more weak hands get into Bitcoin at current prices, the more panic there could be if these people start losing 20% on the price of Bitcoin. And Bitcoin has been known to go down 20% in a matter of weeks or week. So again, anyone that tells you about Wall Street getting in, and unless this person is actually working on Wall Street and directly involved with a company like this, you really want to take their advice with a grain of salt, especially if they're on Twitter telling you this.
Yeah, absolutely true. And that's, potentially followed up by other news of Novogratz, everything. But yeah, and it's saying here in the piece that now the firm is opening trading to a small group of 500 clients with plans to expand, to your point. Giacomo, were you surprised by this news? They also, they have, I believe it's 1,800 employees around the world. There's no small group.
Yeah, not small group at all. So I know nothing about Wall Street. Actually, I'm really disconnected from that. But I'm guilty of the naive interpretation that Tone just exposed about institutionals are coming in, so the price is coming in. Especially in the last fall, I started to consult directly some Swiss banks. They were going to open the option to buy Bitcoin for their everyday retail clients, and I thought that was actually very, very bullish. If I have to defend a little bit this narrative against what Tone said, but actually I do agree with him. But if I have to defend this narrative, I could say that there is some kind of asymmetry between the selling pressure and the buying pressure for new retail banking or investment clients coming in, because the narrative would be something like this. We have an unexpressed buying pressure by people which is outside the Bitcoin world because of buying frictions. So there are traditional investors that would like to buy Bitcoin, but they don't know how to do. They are very traditional ones. They would just love to call their bank and ask their bank to buy. And these investors cannot buy and could not buy right now because they don't know about Coinbase and they are confused about wallets and stuff. They want some reassurance. They want to be intermediated by their traditional intermediators. So in this case, the opening up of a bridge between this kind of technically uneducated investors and very traditional and conservative investors and Bitcoin, this bridge could actually funnel in some buying pressure, while on the other hand, there is not much people owning Bitcoin that do need new kind of bridges in order to sell them. If they're already in Bitcoin, probably they don't have shortage of knowledge and means in order to sell. So usually I think that traditional bridges could be a asymmetrically bullish news, but that's mostly true for banking instrument to retail clients. That's not true for, as Stone says, these are traders and their clients are traders as well. So it's unlikely that they are just very simple-minded, buy and hold new digital gold people. And even if they were, during a bearish moment, they could panic as well. So I think this news could be bullish indirectly with a lag, like when many people will ask their bank to buy Bitcoin, and I know that that's already happening. At least in Switzerland, it was happening massively in the last fall. Now a little bit less because the bubble, the December bubble popped. So for now, until the next bubble of 200,000, people is still is getting back to be skeptical. But when it happened, the opening of bridges could help the expression of the buy pressure, and these kind of banks could actually leverage this kind of financial instruments, even from US, so ETF and futures and derivative as synthetic bitcoins, in order to serve their clients without storing Bitcoin directly, which is an approach that I prefer and I recommend, by the way. I think it's better when a bank learn how to become a Bitcoin exchange and custodian, then like if all the Swiss banks start to trade the American ETF, then we have a very centralized situation with a lot of systemic risks in case there is something wrong with the underlying ETF. So it's better if I mean, these banks are buying and storing gold, so they'd better learn to buy and store digital gold.
Right, that's very interesting, absolutely. And they make a point that they have a specific method, apparently, that they hold and store their Bitcoin, if I understood that correctly. And yeah, right. What I did find interesting to you, Jimmy, and a follow-up from Tone and Giacomo, but also they're at least, PR-wise making the point that, they're interested in it regarding, treating it as a future similar to gold. However, they also still see the future possibility and mention Dorsey as a payment method as well. So I do find it interesting the way that they're looking at its future and as its current situation, obviously, with such interest in trading in it. What's your thoughts?
Well, I mean, this is completely expected. They have a lot of clients and asking to get in the exposure to the sector, and they've been hearing about it for like the last year or so. So of course they're into it, and I think like what Tone said, there's a lot of other companies that are already in. Just they're not going to tell you that they are. That's just kind of how it is, and we'll see what's going to happen. But yeah, I mean, this is completely expected. Pretty much, if you're a firm, there's a lot of people that are looking to get into this stuff. So, I mean, not a surprise at all. I wouldn't be surprised if there were even more people or companies and firms that are into it already. It would be very surprising if some of them didn't have some exposure or whatever.
Great, thank you, Jimmy. I agree with all your points, and it isn't, as I said at the beginning, I don't find it all that surprising as well. And yes, Gemini was absolutely mentioned in the piece, Tone, to your point, and that it was, I believe, the Winklevi when they were, the Winklevoss twins, when they approached them speaking about their ETFs that first piqued their interest. So we're going to move to your interview 2 days ago, Jimmy, to have, since we have Giacomo and you and Tone on the show today, to do a bit more of a deep dive into what's going on, again, with Matt Corallo, with Better Hash. A lot of people are talking about how, this will, affect small miners and, big pools, etc. So I will start with you first, Jimmy. Just again, I guess a bit more of a deep dive, if you could provide with the most interesting and salient points that you found from the interview with Matt Corallo 2 days ago, as relates to, again, his Better Hash, and we can have you and Giacomo do a deep dive for us today.
Yeah, I mean, it's not a very I think Matt describes it a lot better than I do, but basically he's separating Stratum, which is the current protocol for mining pool software, into two different protocols, one a work protocol and one a share protocol. So you can construct blocks from yourself or from another provider, but the actual variance reduction goes into a pool. So most pools exist because you want to reduce variance. If you have a single miner like Tone does, and you're mining on it, the probability of you finding a block is like 1 in a very large amount. So it's going to take you like 10 years to find a single block if you have just like one miner. But if you go into a pool, instead you get like one, some very small fraction of a block, very small fraction of what you would get once every time. So that reduces variance. It makes it a lot more profitable, or a lot easier to pay off debts and stuff for electricity or capital costs or something. So a lot of people are sort of forced to join pools because they don't have enough hash rate. By separating it, but the thing about pools is that they get to construct the block. They get to decide what transactions go in. They get to decide, what messages in the Coinbase and all that stuff. Which honestly, they don't. It's a completely different thing than the actual sharing of the revenue, which is why people are joining. So Matt's protocol basically changes it so that those two things are separated. The variance reduction that you get out of joining a pool is separated from the block construction. Those two have been conflated for a very long time. But by having better hash, you can still get the variance reduction of a pool, and pools will do that and propagate and all that stuff. But the actual get work part of it can come from a completely different source, including yourself. You can construct blocks based on whatever you want as a miner, and as an individual miner, instead of leaving that up to the pool. And that is a tremendous innovation. If you can get that, then you don't have to worry if a single pool has like 90 the hash rate, because each individual miner gets to decide on what the actual block looks like. If they don't have to do any transactions that they think are like double spends or whatever, or abusive of the blockchain. Everyone can sort of do whatever they want, and it makes it like a lot more up to the individual instead of the miner operator. That's essentially what Christopher Allen's talking about in this tweet. That's what Matt and I talked about on that show. Definitely worth taking a look at. I really hope there will be software and mining pools that do this very, very soon.
Thanks, Jimmy. Giacomo, so happy you're on the show. Question, follow up on Jimmy's, what do you think? And also, why is it important that pools have less control? Maybe this second formulation is better? What do you think?
I think that it's important because people talk a lot about decentralization and centralization, but it's difficult to understand where decentralization eventually can occur and what can happen if that occurs. Basically, right now in Bitcoin, there is not really a strong centralization of hashing, so of people actually trying to guess numbers in order to resolve a block puzzle. So this activity of hashing is kind of decentralized. You have two main kinds of centralization. One is the existence of a mining pool that until now, before this better hash innovation, were basically deciding with just one noteworthy exception of P2 pool, but it was very difficult to join and to use. Right now, actually, the pool, like Jimmy said, exists in order to reduce variance for the single miner. So in order to have less variance, you join the pool, and so the pool can construct the block for you. This means that, for example, during the New York agreement attack on Bitcoin, where the miners were actually signaling this undesired, unwanted modification of the Bitcoin protocol and of the Bitcoin client, it was not so difficult to convince few pools, not all the pools, but few pools, to actually join this kind of attack, because you do have very few, small numbers of operators that are able to directly influence or decide the construction of the block. So even if Tone has his ASICs at home in the forest in the north of New York State, then in order to get some money, he has to put this machine at the service of the pool, and the pool can actually build a block with, for example, empty blocks or a Coinbase, which is signaling New York agreement kind of attacks on other kind of nasty things. So it's very important to separate this kind of pooling pressure, also because the other pressure and the other centralization pressure is ASICs manufacturing, ASICs production. And what happened, for example, with Bitmain and all the block size debate and actually the controlling Bitcoin attempt was that the ASICs production quasi-monopolist started to heavily influence the pool operator, and while trying to influence hundreds and thousands of private ASICs owner would be kind of difficult. Trying to influence a single pool operator is actually way easier. So when this proposal gets implemented and widespread, we will have basically a natural decentralization pressure, which is the thermodynamical decentralization pressure of hashing. So you don't want to concentrate all your ASICs in the same place, because it's more difficult to cool them if they are all concentrated, and it's more difficult to get access to a good electricity bill if you exceed some threshold. So there is a natural decentralization pressure, but that's compensated by two centralization pressures. One is variance, and the other one is ASICs production. This thing addresses the first variance without giving control of the content of the block and the structure on the block. So, a lot of things like ASICs boost, covert ASICs boost, empty blocks, constructing the block can be an attack vector. So taking it away from centralized entities is a big win, and it's very important. And it was theoretically, it was easy to do. So practically, it was extremely difficult to do it. It implied a lot of work. So this news is great because it was something that everybody knew that was in theory possible to facilitate, but then it took a lot of work to actually make it work. And Matt did it, and people together with Matt did it, and that's great.
Thank you, Giacomo and Jimmy. This is very interesting. Tone.
I actually have a few questions more than comments.
Great.
I will say that what Giacomo said is actually like it just triggered something, because I remember, like, I know that one of the biggest problems we have is the ASIC operators, almost dictating to the pool what they can and can't do. Otherwise, they don't have to sell them the gear. And this is especially bad. I mean, for something like Slush Pool, Slush Pool doesn't buy any gear themselves. I mean, they could, but they don't have to. That's not how they operate. But something like BitClub, right, which will become a complete Ponzi scheme overnight if Bitmain says, yeah, maybe we'll delay that shipment to you for the next 2 weeks until you guys, do what you're supposed to do and mine the way we want you to mine with our gear. They're totally screwed, right? I mean, an operator like BitClub has absolutely no choice. So I don't know if an operator like BitClub would even offer this kind of service to their users. And my other question is, like, it's great that Matt Corallo has, given us this ability to choose how we want to build those blocks while being on a pool. But for someone like me, who I would say is a little above technological intelligence of the average person, maybe not the average person in Bitcoin, but the average person in general that wants to mine, and I'm struggling to get my miner up and running, period. While connecting to Slush Pool was actually one of the easiest parts, getting it up and running is kind of hard. Like, how simple do you think the directions will be for you as an operator inside a pool, like someone that's running one or two miners, one or two ASICs? How easy would it be for me to be in charge of my own? I don't even know how to phrase it right? Like how would you do it? Is it going to be is it a simple menu? How would
so that's a UX question,
right? Right, the UX side of it.
To say you what you can do is say something like, I want to be in the Bitmain and pool for the payout variance reduction, but I'm going to use Slush for the block construction. And
that would be awesome.
That's exactly what this lets you do. So you could, Bitmain can have 90%, but as far as the block construction, they have zero control because every miner constructs their own, Merkle root and everything else. The only difference is in the Coinbase, and that's something that they can easily verify when they get shares, and that's how they do the payout. So it's actually really cool in that way.
Right. So then it won't matter if you have,
exactly
having 90% of all the blocks.
Yeah. This takes away the 51% attack from the pool, and it makes it a lot more secure. And this is something that he's been working on for a while. This is something that they've been talking about doing for a while. I think he identified mining as a place where we can definitely add a lot more security, and this is why he made it.
Yeah, no, that's actually good. So now you're gonna just measure it by which pools are constructing the blocks, and there'll be like a choice of how the blocks are being constructed.
And you could do it yourself. The block construction you could do straight from. Well, hopefully after Matt's finished with this, you should be able to do it from Bitcoin D. Right, you can have your own full node running, and using that full node, you can set some policies on what sort of blocks you want to construct, and based on that, you construct the block according to your conscience instead of. And like Giacomo said, it's not 5 people in control of block construction anymore. It's like pretty much anyone that owns a miner gets a say in how blocks are constructed, and it's really based on who finds the block and not necessarily on which pool they've joined.
Yeah, that's pretty cool. And if one specific like block construction from an entity like Slush starts to becoming too popular, then someone can easily clone the same exact block construction and set that up on its own, and then people can just use that one for diversification, and nothing really changes from the miner's end.
Yeah, and you can run your own, and right. It's that's not costly at all. It's running your own node, which a lot of miners do anyway. But it's entirely flexible. You can add, if you want to merge mine or something like that. And pools might have policies that say if you're not merge mining, then we're not going to accept your shares or something like that. So I mean, it's a very flexible thing that Matt's created, and that's the main thing that we can gain out of this is that. Because of the flexibility, it removes a lot of the control from people that, some people might still say, you know what, you construct the block and I'll still mine and do all that because I don't really care about that. And there may be people like that, but you also have the choice if you are doing something like this and you're, a miner in Montreal getting like hydroelectric power, you can say, okay, well, I want the variance reduction of Bitmain, but I want the block. I'm going to do my own block construction. It's so flexible, and that's one of the beauties of it.
Sorry, something. Probably I have to correct something I said. Like Jimmy pointed out, the Coinbase, of course, needs to be controlled by the guys who control the payout.
Well, parts of the Coinbase. Really, it's just the output. But yeah,
okay. So the message. So like the free text that can be used in order to signal stuff, do you think is part of the block construction or not?
So it depends. So if you look through Matt's bit, there's like a whole bunch of stuff on like constructing the Coinbase transaction, and he took pains to make it so that it's very flexible, and you can say so that if we have like a new like the SegWit commitment went into the Coinbase, and that required like a firmware upgrade for like every miner because mining equipment just didn't know how to do that. But there was no reason to do that. If you had a more flexible Coinbase construction stuff as part of the protocol, then you don't need to upgrade the firmware. So you can sort of mix and match parts of the Coinbase, and the mining pool can, as long as you submit a share that the mining pool accepts, and they can have different policies based on that, saying, okay, well, you need to merge mine in order to be a part of our pool, and we need to make sure that you had a merge mining thing as part of your script-sig and your Coinbase transaction. Or they might say you needed an op return here because we merge mine with this other thing or whatever. There's a lot of flexibility, and that again leaves the choice up to the mining equipment owner and not the mining pool, and that's the key.
Thanks, Jimmy. Giacomo, any last thoughts? Jimmy's a little short in time, so we're gonna skip to the mempool and come back to an SEC.
No, thank you, Jimmy, for the clarification. Let's go.
Okay.
That was awesome. All right, I'm gonna try to make this full screen. But Jimmy, the weather report is up, and then
Yeah,
I will.
it looks like the same as the last few days. The 1 Satoshi per byte is taken by like a tremendous amount of UTXO consolidation that we believe that a lot of exchanges are doing right now as a result of the low fees. So if you want to get in, I would say 2 Satoshi per byte, and you can probably get in the next few hours. If you need it in the next block, I would suggest maybe 10, and you should be good to go. But yeah, I mean, it's still very low. I don't think you need to worry too much about that unless there's a giant, list of, mempool spam that comes in or something like that. I do want to give a little shout out to the interview that I did yesterday. Matt Corrales was 2 days ago, and yesterday I did an interview with Ken Liu. He's a very, very good friend of mine. He wrote a story in the MIT Tech Review anthology. So they put out a list of short science fiction short stories every year, and based on sort of technology that's coming up. My friend Ken created a cryptocurrency story based on a fictional cryptocurrency called Empathium. Really interesting story. But the real nugget in there is that he explains a lot of the technical concepts in words that are very easy to understand. So he explains the Byzantine generals problem. He explains what consensus is. He explains decentralization in ways that only a really talented writer like he can do. And I encourage you guys to go take a look at that book. Take a look at that interview. It's pretty wide ranging. We talked about everything from like our, when we met and like 20 years ago with the startup that we were both a part of, all the way to just sort of writing and what that process is like, and science fiction, and a little bit of libertarianism, and why top-down processes of things just don't work. And that was actually a very good way to say why ICOs don't work, period, is because you're trying to do a top-down design without knowing the ground level reality, and that almost never works, which is part of his story as well, is knowing about sort of the geopolitical reality of something is not enough. You need to know the ground level reality of something before you can make any decisions on anything that makes sense. So really good story. I would encourage anybody that's interested in sci-fi and crypto to take a look at his stuff.
Thanks, Jimmy. Yeah, I caught it yesterday. I just liked it on screen. It was fantastic. It was really interesting. Maybe Jimmy's gonna write a sci-fi novel. I heard that one. But he's brilliant. I mean, a lawyer, a coder. You guys had a funny backstory of when you worked in the startup together. I heard mice in the apartment, Jimmy.
Yeah. Oh, dude. Yeah. I mean, first of all, Ken's one of the smartest people I know. Like a fantastic coder as well. I've worked with a lot of brilliant coders. He's right up there in the top 5. Like he taught CS at Harvard for a while. He went to Harvard Law. He taught CS at Harvard. He's like worked in litigation consulting. He's like been a lawyer. He's been a writer. He's been a coder. He's done a ton of stuff. So yeah, he is one sharp person. So very enjoyable interview for me, just because it's like any of our other normal conversations that we have whenever we talk. So take a look at it. Yeah, I'm trying to bring in more into Bitcoin. I have been trying for like the last 4 years. So anyway, good stuff. Anyway, sorry guys, I'm gonna have to go, and this song is done. Sorry about the lack of video. I'm like outside at the moment, but thanks.
We hear the birds. Thank you so much, Jimmy. Okay, so we are moving to, all right, this is gonna be fun. So yeah, so Clayton made some great statements yesterday that were pro-Bitcoin, and even though it was elusive, it was not elusive that he is considering ICOs to be securities, Bitcoin to not be a security. And let's see if this works out, because yes, I am on a boat. Gonna play a bit of this.
Distributed ledger technology.
Tone, tell me when you want me to cut it off. Otherwise, it is very important.
All right, let's do it.
Let's do it.
Incredible promise. It can drive efficiencies not only in the financial markets, but in a lot of markets. Fine. 2 areas in the financial markets where distributed ledger technology has come to the fore. Cryptocurrencies. These are replacements for sovereign currencies. Replace the dollar, the yen, the euro with Bitcoin. That type of currency is not a security. Let me turn to what's a security. A token, a digital asset where I give you my money and you go off and make a venture. You have some company you want to start or something, and in return for me giving you my money, you say, you know what, I'm going to give you a return. Or you can get a return in the secondary market by selling your token to somebody. That is a security, and we regulate that. We regulate the offering of that security, and we regulate the trading of that security. And that's our job, and we've been doing it for a long time.
So you're saying the classic definition of security, you invest in a common enterprise with an expectation of profit. You're saying the way you look at most ICOs, they are securities.
Correct.
Are you planning now to make a clear statement on that? Because there seems to be a lot of confusion about whether anybody is going to get approved or not.
Bob, I hope I just did. If it's a security, we're regulating it. And let me just, we've been doing this for a long time, and we've built a $19 trillion economy, a securities market that's the envy of the world, following these rules. If you have an ICO or a stock and you want to sell it in a private placement, follow the private placement rules. There's no secondary trading. You know, you have to do that. If you want to do an IPO with a token, come see us, file financial statements, file disclosure, take the responsibility our laws require, and we're happy to help you do that public offering.
You seem to be saying that the SEC is not going to be changing the definition of a security just to suit the ICO community. Is that right?
I'm certainly not going to support that.
Okay, let me move on. What about altcoins? We have discussed Bitcoin, but there are other altcoins out there. There is Ether, for example. There is Ripple. Is Ether a security?
So Bob, I'm not going to comment on specific crypto assets and whether they are a security or not a security, but you captured the definition very well. Now, am I giving you my money for you to go off in a venture, or I'm relying on your efforts and the efforts of your colleagues?
But you understand there are lawsuits, I'm sure you know right now.
I think that's enough.
I think so too. So that is government speak for yes, they are securities. Anyways, Tone, what do you think? I think they finally made it a little definitive, obviously.
Yeah, I mean, it's exactly what some of us have been saying for a long time. So look, there is absolutely no doubt that Ethereum throughout 2014 and 2015 was a security. It was issued like a security. You bought Ethereum a year before Ethereum existed. You gave it to an entity. That entity was going to build something, and then you had an expectation of profit on that Ethereum by then selling it in the secondary market after Ethereum launched. Now, Ethereum founders are gonna, try to claim that everyone that bought Ethereum did not have an expectation of profit, which is ridiculous, right? Now, the other thing they're going to try to argue now is that Ethereum might have been a security. It is no longer a security, which to me makes absolutely no sense at all. It's
Tone, you want
right
me
now.
There you go.
So it no longer counts, right? I mean, you were a security, and you did not follow the laws of a security. And it was obvious to some of us at the time, which is why I never advised anyone to ever buy into Ethereum. And then I was a laughing stock for a long time while Ethereum went from 20 cents at the pre-ICO to $1 for the first year of its existence because they couldn't figure out what the hell it's going to be used for. And now they found a use case in creating other unlicensed, unregistered securities. So the price of Ethereum is like $600-700. Now, in reality, people that are holding Ethereum have no comprehension of what a security is, because otherwise they probably wouldn't be holding Ethereum to begin with. And so I don't really see a big exit of people selling Ethereum. They're going to assume that, Ethereum is a security now, and it's going to just have to start trading on, legit exchanges that have licenses to trade securities. So, I mean, I don't understand how the ICO stuff is still around, but the SEC has made it pretty clear to me that if you are, and this is what we said, this is what me and Jason Seibert tried to explain in the last like real episode of Crypto Scam that I did, which was the Ethereum one. And we tried to explain
Yeah, I can still read you, but I think
Okay. All right. Well, Giacomo, like a great libertarian, can you please weigh in on the United States government?
yeah, basically. So I will take advantage of the technical fault of Tone's connection in order to transform this broadcast into a libertarian anarchist. Oh no, Tone is back. No, anyway.
Do it quick. Do it quick.
So I have to be quick. So no, for real, I have very, very mixed feelings when I watch a video like this, because on one side, I can see that everything that rational people said about ICOs and tokens and altcoins has been vindicated. Like people with some rationality said exactly this since years. Ton is saying this since before Disconnected. Ton was mentioning the last crypto scam episode, and consistently just said this about Ethereum, about Ripple, about the ICO tokens. I said the same. Every rational people say the same. So when you finally see the confirmation that what we predicted was inevitable, you cannot help but being somehow intellectually vindicated, and so there is some satisfaction in listening to this kind of sentences. Also because it makes sense. I mean, it was inevitable. Their job is to regulate securities. Altcoins, centralized altcoins, and ICO tokens are securities, especially ICOs like Ethereum, but also non-ICOs, but kind of ICOs like Ripples with a lot of giveaway, but a part of ICO. So they are security. So it's rational that the security regulators will go after them. On the other side, of course, I'm not happy to listen to a government employee saying that they are going to force adult people into complying with their disposition about going private equity or going stock market. I don't think it's their business to decide what I do with my money, even if I lose, because what's the end point? Is the Food and Drug Administration going to stop me from buying fat or sweet food because of my diabetes risk? I mean, I don't like the nanny state. I don't like these guys. I don't like the satisfaction which it says that is going to regulate everything. But on the other side, I think that I will be happy to finally see some kind of crypto security that can effectively be unaffected by this kind of regulation attempt. The thing is that, you see, when this guy says that, obviously, that Ether is a security and Bitcoin is not a security, that doesn't mean that Bitcoin that there isn't an attempt to regulate Bitcoin. There isn't an attempt to regulate Bitcoin by the SEC, but there is an attempt to impose AML, anti-money laundering, know your customer, banking licenses for exchanges, money trading. I mean, if you want to do an exchange in the US, you have to get the money transmitter license for every state. So it's not that there isn't a regulatory attempt on Bitcoin. It's just that Bitcoin, to a certain degree, is able to just ignore it, and the Oni Badger doesn't care because you cannot stop it. So you can stop some kind of bridges, and you can stop some middle. Yeah.
Yeah, let me just mention that, like, Bitcoin itself is not a security. But if you are going to create some kind of a business where you are taking Bitcoin from other people, doing something, and then returning these people Bitcoin with an expectation of profit for those people, then yes, the SEC has once again jurisdiction over the Bitcoin venture that you're building. This is why, what's his name? Trendon Shavers of Bitcoin Savings and Trust is, I believe, currently still in prison, because he was borrowing Bitcoin. People were lending him Bitcoin with an expectation of profit. It's all about the expectation of profit. And before I got cut off, lots of people are like equating this ICO stuff to the Indiegogo campaigns, where you put in, $300 or something because you want to get a head start on buying, I don't know, a cooler or a new type of monitor or a new type of drone. The point is, you are giving them the money for them to build you this product. And you don't actually have an expectation of profit by reselling that product once you get it. Now, you could resell that product, but there's no expectation of profit. And if you ask anyone that contributed, $100 to buy, let's say, a cooler, and you tell them, hey, are you interested? Are you buying this cooler just to resell it and make money? Or are you buying this cooler because you want this cooler and you think it's cool? 99.999% of the people, if not 100% of the people, will say, I want this product because it's cool. Okay, that's not what the case was in Ethereum or any other ICO or anything else in the space.
I will argue you will not just not profit. In the case of Indiegogo or Kickstarter, you would actually sell it at loss. First reason is that, of course, is a used product. But also, if the startup, if the Indiegogo or a Kickstarter startup become successful, then there are reasons to think that the unit product produced will cost less because of economies of scale, not more. So actually, if I have to create a new cooler, when I will be an established and successful project, probably my individual cooler, both after my success, will be less expensive than the individual cooler that was bought as a pre-sale during my launching phase.
And on top of that, chances are, the first iteration of the product is going to be a lot crappier and buggier than the second. I mean, all of us that had the first iPhone, the first Android phone, the first iPad, learned this lesson very, very quickly.
Yeah, exactly. It's like iPhone, like Apple is pre-selling. That's a perfect example. Tesla is pre-selling Tesla models that don't really exist right now. They're selling it now. They're getting the money. They're using the money to build. But you don't expect to resell that Tesla to a higher price. Actually, you know that when you will receive your Tesla, the price of a Tesla will be actually lower because it will be already not a pre-sale.
Unless you are a registered car dealer who specifically is buying that stuff with an expectation of profit for a resale. Like, unless that's actually clear and that is your job to do so. But that's not the general public.
And probably in that case, you're just going to leverage some kind of arbitrage between countries or a kind of
and again, those are physical goods. People have to stop comparing physical goods to virtual stock. It's the only example that I have, pretty much.
Well, I mean, I can imagine also virtual stuff sold like this. Like, for example, I have to create a telephone company. I'm selling you before minutes of airtime. So even if it's not physical in a way, or this storage or computation power, so I can pre-sell you computation power. But it's not an investment. It's just a pre-purchase.
Good point. No, good point. And on a one final note, like, it's so grossly obvious that things like Ripple and Ethereum are securities. It's grossly obvious. I don't understand how people are arguing against this. Even like some lawyers, like, I don't understand what the hell Coin Center is doing. I should probably get them on this show. I don't understand that. But the bigger question is going to be, like, it's obvious. It's also obvious that Bitcoin, Litecoin, Dogecoin, probably even things like Maxcoin. I'm running out of, the legitimate proof of work altcoins because there's very few of them. Dash doesn't fall. Well, things like Dash and Zcash, they're going to be very interesting because an argument can be made that there was an expectation of profit by the people involved in creating that coin. Because in the case of Zcash, they are keeping 20% of the mining reward. I think that I don't even think the Ethereum being a security is going to be the trademark case. I think that one should be obvious. And if the SEC does not rule Ethereum a security, they're basically not doing their job, in my opinion. Now, we can debate whether the SEC should have a job. And me and Giacomo will probably be in this debate whether the SEC should or shouldn't exist. But the SEC does exist. And it's basically, and if they don't call Ethereum a security, I believe they're not doing their job. And now, as far as Zcash and Dash, those are going to be debatable. Those are going to be debatable if they are or aren't securities. In addition, I think proof of stake in general could be labeled a security because you're buying a token, staking it with an expectation of profit. Again, and when you have a central entity like the Dash Foundation that seems to have all the control in the world, they have these master nodes. So people are buying into Dash with an expectation of profit that the Dash Foundation is providing them by maintaining this master node economy. So I think those are going to be the fringe cases to decide if Dash and Zcash are securities or not, while Bitcoin, Litecoin, Dogecoin, Maxcoin, I don't know. I don't know if you guys can name any others. I think I'm done on that front.
Monero itself.
Monero. Monero as well. Forgot about that one. So the very few of them, very few of them, right? They're gonna escape the security route natively. Doesn't mean that they're not a security based on how you borrow, providing people an expectation of profit. And like Jason Seibert said, the lawyer, people have been trying to get around that statement. You give me money and you are expecting profit. People have been trying to get around that idea for 50 years. And it's not easy.
Absolutely. Just as the last comment by my side about this, I sometimes wonder why a rational person would expect that the SEC will not do their job as far as Ether is concerned. And my only possible answer that I see from this video was probably too much science fiction. But one possible, very, let's say, tinfoil hat answer was that we could be in a scenario in which regulators in general, so transversally, are so scared about Bitcoin, maybe during the first phases of hyper-Bitcoinization, and they want to fight Bitcoin so much that everything which perceived to be somehow competitor or somehow distracting or diverting the resources or attention from Bitcoin is seen with more sympathy, especially if that's more easy to control. So like you are Vladimir Putin, you know that Ether is a security, but if you crack down Ether, you're left with a thing that you cannot control, inviting Vitalik in your garden. So probably there is some conflict of interest, because if you crash down the Bitcoin centralized clones, easy to control, then you're basically leaving the free zone for Bitcoin, which is more scarce.
There's so much more to say on this, and I really want to say, but
I'm gonna cut you guys off.
Yeah. Leah needs to have some fun on the boat.
Yeah, everybody's already
bring this back up.
Well, first of all, Giacomo, a couple points. One, and then I'll end. We don't know what kind of relationship Tone has with Vladimir Putin. So when you make that statement,
right.
We have no idea what kind of advising he's doing there. As a hypothesis of my own, we don't know. Lobbyists are very powerful in Washington, D.C. And with how invested all of Silicon Valley has been in Ripple, and right. And it says my connection's unstable. Makes sense. I'm on a boat. I wouldn't be surprised if they were dragging their feet for so long. One, because of the rest of the agencies don't know what to do. Obviously Congress and the legislative branch isn't at all informed on what's to do. That all has to do with the fact also that congressmen are extraordinarily stretched, and they usually take points from their staffers, and the staffers are very ill-informed right now, and especially since we've been covering that the Washington Post has been getting some stories of these wrong. But moreover, if I were to make one, contrarian to where I live, well, actually, I am gone from Washington, D.C. They can't find me right now. It's just simply put that with all the power behind the altcoins right now and how much money's behind it, and the law firms, that are also scared, right? We've been talking about how, VCs, right? The Perkins Coeys, the Cooley, all the people, the marketing firms, the myriad of the industries that were involved in all these altcoins, they're probably extraordinarily scared shitless about their shitcoins. So it wouldn't have surprised me if so long there's just been so much lobbying and taking a fancy, dinners and dances here in Washington, D.C. that it's also, muddied the waters. Luckily, I am at least very proud that Clayton's finally standing up and, people were writing stories, last thing, that were just saying that it isn't entirely clear on how he states his stance on ICOs, but I think that was pretty damn clear as far as you can get with Washington, D.C. until, you know, there's that official public announcement. But it seemed very official with Bitcoin. Tone Vase, you want to do some TA so that
Sure.
you know, I won't get into too much trouble?
We do need to talk about this topic a lot more. I think in the near future, hopefully we'll be back.
Last comment. I am actually, Giacomo, to you. I'm actually really curious how this is going to ripple, and how, you know, Europe's effect, you know.
Well, the price of Bitcoin sure as hell been going up the last since that news kind of broke.
There you go. You're not on screen share.
I know. I'm getting there. Hold on.
It's because they're always listening to us.
What's going on with my connection here?
Everybody, all right. Well, until he figures it out.
I don't know what's going on.
So we docked. Everybody left, and I'm being the person who's still on the boat. And there we go. All right,
yeah,
so do it up.
Need to go eat. All right, let's talk about this. So Bitcoin is trending up. Here's the weekly chart. Now I should probably pull up volume. Oh boy. Not much volume this week. Look at this tiny little thing. I mean, today is Thursday, so we still have time, but I don't really see volume going much above last week's volume. And you can see how the average weekly volume has been going down. So not much volume. I mean, Bitcoin isn't really pumping on this ICOs or securities news. But we'll see. We are at 7,700. The weekly chart remains below the 50-week moving average. So until something on that front changes, there's really not much happening with that. Let's move on to the daily time frame. I've been kind of skipping the daily time frame only because the 12-hour time frame is where I have the symmetric triangle. Here's the daily time frame. It gave you a very inconvenient 9. The reason why is because this 9, we bottomed on the candle number 8, and candle number 9 did not take place at the top. I was really hoping that this 9 candle would take place in the vicinity of 7,900 or 8,000 to give you a beautiful shorting opportunity of resistance. That did not happen, and it made this a very tricky situation. I guess this is a quasi cup and handle for a potential breakout for as much as $500 or $600 to the upside, which would take you into the top of the triangle on the 12-hour time frame. So if you go back to that interview that I had with Nick, Nick and I had slightly different views on it. I felt that we would actually be more likely to go to the top of this triangle if we don't go back and make a secondary low in the $7,000 vicinity. Nick felt that we are more likely to go to 8,200 in the top of the triangle. It looks like even higher than that, 80 up to as high as 8,700 at the top of the symmetric triangle if we do go back and make a secondary low and provide the necessary momentum and divergence. However, we are still stuck under this big red line of 77.50. So I am gonna trust this 12-hour time frame, and I would say if we can break and close above the 77.50 area and the 50-period moving average, which is currently at 78, but it's probably going to drop over the next 24 to 36 hours. If we can get above this thick red line, then the probability of us going to that $8,400, $8,500 top of the triangle is high. But always remember, we are in a bear market, guys. So in a bear market, while good news could drive the price to the upside, news never reverses the overall trend. And there will be some bad news coming out that's going to get over-exaggerated, that's going to drive the price down further than it should. So while I am starting to get midterm bullish, my longer-term trend remains bearish, and my target is still for $5,475. And people keep asking me, when is that going to happen? Because apparently, according to me, it was already supposed to happen, which is totally not true. I'm still expecting that to happen sometime in July. So I'm not actually expecting us to break 6,000 this month. If anything, it's next month or maybe even later this year. But I remain a longer-term bear, even though the shorter-term time frames are starting to go bullish here. And again, this is my line right here at 77.50 across many time frames. 77.50 is very relevant. So I would love to see at least a 12-hour close candle above 77.50 and then a higher high. This is an interesting one, right? So we had a 9 on the upside that didn't really hold. And then by some miracle, we had a 9 on the downside that didn't hold when the price did almost nothing. I mean, probably on most exchanges, this did not happen. Yeah, so most of the short-term metrics are starting to go bullish. I still want to see 77.50 and then 82, 8,300 is possible. So I will become a bull then. Glance at gold, nothing's going on. Whoa, look at the NASDAQ here. That is a monster bearish engulfing, which does not look well. I mean, it's a little bit tricky because your daily 9 was followed with a higher candle and then a higher high. But like I've been warning people, the weekly is on an 8. That will give you a 9 starting Monday, no matter what. So the markets are a little toppy here, so be real careful. And I'm off to Dublin. Oh, that's the affiliate code. So hey guys, if you like my work and you enjoy my work, please check out the affiliates page. But I was going to talk about Dublin, the Dublin workshop. I should probably tweet this out. Still have lots of seats left. It will be a very nice small workshop. I will be, I'm off to Dublin today. I'll be in Dublin tomorrow morning. I am actually redoing my my presentation for the workshop for the first half of the day. So I'll probably be working all day tomorrow in Dublin, unfortunately. But if you are in Dublin and you're not looking to kidnap me, please reach out, probably on Twitter, or unless you have my other contact. And we'll see. Maybe I'll go out and grab a drink tomorrow night, which is Friday night. And we'll still do the show. I'll be on Giacomo's time zone or close to it. So we'll see and we'll figure that out. That's about it for me, guys. I got to start packing. So let me get off screen share. And Leah's got to like eat and join her colleagues.
Yeah, I don't know about that one. They are like, yeah, internet's unstable again. Actually, they're all quantum computing experts. They actually built their own quantum computer. All that are not from Maryland, obviously. I was Miss Maryland. And we are at a crabbing dock. So if you catch crabs, crabbing is a big thing here, and then you steam blue crabs, we're really famous for, and then you smash them. Doesn't matter. All the gentlemen inside there wearing suits are going to get crab guts all over themselves. So let me go see how hilarious that is. Gentlemen, thank you so much. This has been an interesting, fun day. I just get to learn from you guys all day. Giacomo, how's everything going? We know that Tone is about to leave, and where are you right now, and what's the rest of your day look like before we sign off?
So I'm in Italy, Milan right now, and the rest of my day is again just changing diapers. So nothing very special. But I have a last clarification to do before we close. So there is a guy in the live chat that says that
you don't know this.
Yeah. So Slavmart said these two guys are definitely bald because no one over 35 wears a hat indoors otherwise. So I want to clarify that yes, I'm almost bald, but I'm 34, so I can take this hat.
Don, any comment? What are your thoughts about this?
Can I be 34? I'm close. I'm close to 34. Does that count?
Sure.
No. I'm totally sporting the hats. I now wear with suits. It's becoming my brand. It's not about the hair anymore. It's about the brand. I finally have a purpose for a brand.
Oh my God. I actually do have my HODL hat that you gave me. Okay, with that said, everybody have a wonderful day. Gentlemen, thank you so much.
Bye, guys. Go eat some crab for us, Leah.
Thank you.